What is up, everybody? This is Undiscovered Wealth. Alrighty, so today it's the first video I'm making and breaking down how I trade. So I'm gonna start with market structure. So what is market structure? Market structure is how the market moves, and the market only moves in three ways, which is an uptrend, downtrend, and a range. So I'm gonna explain into detail what is an uptrend, and I also wanna explain into detail what is a range. Once I'm done, then I'll be able to go into the live charts. Okay, alrighty, so let's start. So this right here is an uptrend. How do we see that it's an uptrend? Because it had a high, then it had a low. So this is the highest point where price could have gotten, this is the lowest point where price could have gotten. So that got violated, so it created a higher high, right? So this is a higher high, then it created a low, but this low is higher than the previous one. So what do we call it? We call it a lower high. Then it created another high, but this high is higher than this high. So what do we call it? A higher high. Then it created another low, but this low is higher than this previous low. So we call it a higher low. So that's what it is. So sometimes the market is not going to move like this. So this is why I made an example of this. Okay, so sometimes the market is not going to move like this. Sometimes it will move like this, whereby it creates a high, then it drops, creates like a fake out low, then it creates another low, like another high below this one, then it drops down, creates a low, and then it goes up, then it also goes down. So it's not always going to be moving in a straight pattern like this. Sometimes we'll create fake outs like this to trick traders into taking trades, thinking that maybe what changing the direction now, or going to a downtrend. Alrighty, so this is what an uptrend is. So if it's a H is for a high, L is for a low, HH is for a higher high, LH, let's just fix that, LH is for a lower high. So this is an uptrend. Uptrend means buy. So we're looking for buys when we're in an uptrend. Now we're in a downtrend. So what is a downtrend? So a downtrend is the exact opposite of an uptrend. So a price creates a high, then it creates a low, then it creates another high, but this high is lower than the previous high, so we call it a lower high. Then it creates another low, but this low is lower than the previous one, so we call it a lower low. Creates another high, but this high is lower than the previous one, so we call it a lower high. So that's a downtrend. So that's how we identify a downtrend. So this means that the market is selling, right? So once again, it's not going to be moving in a straight direction like this. Sometimes it will create a little bit of fake outs to trick traders to thinking that the market is changing the direction. So yeah, it's not always going to be a clean movement. So now downtrend are for sales. When we're in a downtrend, we're looking for sales. For example, so if you see an H is for high, if you see a L is for low, LL is for lower low, HL is for a lower high. So that's what a downtrend is. I'm also going to show a live example in the charts to get you into a bit of a feel. And lastly, we do have what we call a range. So I call it a range because basically it's when market is ranging in one direction. It's not going up, it's not going down. It's where price is creating highs and lows. So it's ranging in one direction. It creates a high, creates a low, creates another high, creates a low, creates another high, creates a low, creates another high, creates a low. So it's basically moving in one direction. So it doesn't give it's not giving a clear direction as to where it's gonna go, and so it just keeps on ranging in one place. So when usually something like this means that there's a lot of money resting above here, and there's a lot of money resting below here. So there's liquidity. So market has to sweep that liquidity before it continues with the direction. So those are the three basic or base or core values or core things that I look for. So that I look for an uptrend or downtrend. I also have an understanding that before any trend, there firstly has to be a range. The market must firstly range before it creates an uptrend. The market must firstly range before it creates a downtrend. So having that in mind, that firstly has a range before we continue with the direction. So you must like be patient in these things. You mustn't rush them. You mustn't rush any entries. Let the market come to you before you take your move. Now have a few confirmations. I'm gonna share those confirmations with you along the line as I'm making these videos. So yeah, it's really a lot, but like not in that sense, but I'm gonna break it down to like an ABC version, like an easy way for you to be able to trade it. So we have uptrend, we have a downtrend, and we have a range. Right? Uptrends we buy, downtrends we sell, range we just wait. We don't trade the range because the range doesn't have any rules. Alright? Okay, so I'm gonna get into the chart now. Okay, so let's just not look at this entire part. Let's just start here. When we're looking at price, right? So what price did, let me get my tools out. Okay, so what price did, this is a low, created a high, right? Then it created a low, created another high. All right, so it created a low, created another high, also created another low, created another high. Alrighty, so let me just get this sorted out real quick. Okay, right, so this is a downtrend. What did the market do? Created a high, created a low, 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 but I wouldn't have considered this as a low, but okay, so yeah, I wouldn't have considered this as a low because it didn't like close below here, but completely fine. Plus this, I'm going to also consider this as a high because it didn't close above here, so this would have been our low here on my side, right? So the market, what is the market currently doing right now? The market is currently in a downtrend. Alrighty, so let me just mark it up for you so that you can be able to see clearly. Okay, so market is in a downtrend. Creates a high. Let me just change it. Change to a dash line. Okay, so market created a low, created a high. Okay, so this is a high. Created a low. So this low is lower than the previous low, so it's a lower low. What did market do again? Then it went up. So as it went up, then it pushes down. It's completely up to you how you label it, but mostly how I label it is I look at the most biggest highs and the biggest lows. For example, like here, I could have used this, or I could have used this, but just for argument's sake, let's just use this one. Then it created a low, which was this low, right? Then it pushed, right? Then it created a high, pushed down, created another low. So basically what we're looking at highs, low. So this could have been a high, but basically it's on the same level as this one. Okay, so still the same thing. So created a high here on this side, then it created a low, like it pushed down, created a low here, created another high, like it created another lower high, right? Then it created another lower low, created another lower high, and created another lower low. So basically this is what I'm looking at when I go into the market. I look for the trend, whether it's an uptrend or a downtrend. So looking at this is a downtrend. Alright, so I'm going to mark it for you in different ways. Okay, let's see what I could do. Let me just mark it for you in different ways. Let's use this. Okay, so let's use this. Okay, well, let me just use my box. Yeah, let me use my box to make things a bit more straighter. Okay, so this is how I basically go into the market looking at it. Right, so in order for me to consider it, like a valid low or a valid high, the body has to close below that level. The body has to close below that level in order for me to be able to consider it as a valid low or high, like as a valid market structure, like a break of structure. So it's breaking structure to the downside, right? So that's how other people know it, but I just call it like market structure. We're in a downtrend. So because it created this low and it closed the body of these candles, they closed below this low. So this is why I'm calling it a low. For example, take this one for instance. Okay, it didn't close above this, it only wicked out. So that's a clear indication that the market has not changed hasn't changed the direction it's going. So it's still in a downtrend. Okay, so we're following it along. Also creates another low. Body closes below here. Also creates another low. Body closes below here. So that's a downtrend. Okay, so that's a downtrend. Right here, because the body closed up, we call above it, we call it a market structure shift, but I'll get into that on a different video. For now, I just want you to focus on uptrends and downtrends. So downtrend sells when the market is going down, uptrends buys. So it's the exact opposite. Alrighty, so now we're getting into an uptrend. So some might ask, what is an uptrend? So an uptrend, we want to start from here. Price created a high, right? Then it created a low, right? But price didn't violate this low, so it continued to push up. So now I know that we're in an uptrend. So it created another high, and then it created another low, right? Then it created another low. Remember when I mentioned that the market doesn't just move in a straight line? So these are some of the things. Because it might have tricked some traders to enter in here, thinking that the market is not going to buy, only to find out that it's going to sell and getting stopped out. Alright, so this is a high, this is a low. So price closed above here, but then it ranged a little bit, went down a little bit, then also went up, also went down. So high, this is the low, because this is the lowest point. Okay, so basically it's creating a high and a low. A higher high because it's higher than the previous low, so it's higher than the previous high. Then it creates a lower high because it creates a higher low because it's higher than the previous low. Then it creates another high, but here on this side it like really liquidated, so you might have getting a bit confused on that side, but let's not pay more attention to this. But sometimes the market will do this, right? So if you'd like, you can also label it as well, but you could also like mark it as well. Created another high, then it created a low. It created a higher high, then it created a lower high, then it pushed up and created another higher high. So this is a clear indication that the market is in an uptrend, right? So on an uptrend, we're only looking for buys, not for sales, just for buys, clear buys in the direction we want them to go. So yeah, this is an uptrend. Created a high, created a low, created a higher high, created a higher low, then it created a higher high, then it created a higher low, then it created a higher high. So basically the market is going up. In this sense, it's going up. It's going up in this sense. So that's an uptrend. Alrighty. So this is a range. So this is where the market created a high, created a low, created a high. So it came back here. So this is basically a range. So ranges are something more or less like this. It's ranging in one direction. It's not taking buys, it's not taking sells. So it's when the market is ranging in one direction. Sometimes it can wick up a little bit just to trick traders into taking trades, thinking that, you know what, now we're buying, only to get stopped out. So this is what it's doing. So this is a range, right? So this is a range. A range only moves in one direction, and that direction is when the market is not taking any direction. Like it's when it's like buying and selling at the same place. It's not going up, it's not going down, it's just going in one place. So this is a range. Because like if you look at it from here, this is where it opened. So this is where it also charged, this is where it also charged, but it did a huge break above this loan, showing that it indicated to go up, but there's not enough confirmation for me to take an entry. Same here on the downside, so also continue to range, you know. So you wouldn't have made any profit here because you would have buyed, came down to you buy, sometimes you might even get it stopped out. So this is a range, right? So this is a range. Based on how I trade, this is a range. Now one important thing about ranges, before an important move or before an uptrend or a downtrend starts, the market firstly has to range. After it's done ranging, then it can continue with its direction, right? So those are the important things. Yeah, so those are the most important things. So uptrend, market is going up, so it's a buy. Downtrend, market is going down, so that's a sell. Then range, we don't trade a range because it's not taking any direction, it's just in one place. So this is a range. You can go back test it on your side as well to see it on your side as well, okay, to find out more as to like so that you can be able to identify it in your charts as well. But uptrend, downtrend, range, those are the most important things. Everything else happens in the market, but those three are the most basic and the most important things, because the market moves in three ways. It can either go up, or it can go down, or can stay in one place where it consolidates. So those are the three important things. Hope to see you on the next video. This is Undiscovered Wealth, signing out.